Hey, this is Matt from InvestiQuant. Today is Friday, November 13th, 2020. And yesterday we saw a fairly weak day in the markets. They actually got quite weak into the middle of the afternoon, but they did have a late rally into the close, which kind of saved it from some of the damage that was taking place. And we've basically been trading in a range for the majority of the week, and we traded back towards around the middle of that range when we finally rallied. But we were down sizably at the close yesterday, and in the overnight session we are starting to push back towards the highs of this recent consolidation area that we have been in. But yesterday closed pretty weak, and what I want to do is look at a pattern based upon yesterday's weak close. And this is not the same closing pattern that we have in all four instruments. They all had a slightly different variation, but what I'm going to do this morning is take a look at a close relative to the pivot point. And pivot points are support and resistance areas that traders have used for a long time. They're mathematically calculated, and they adapt to volatility and can be used to test patterns pretty easily. So we've got those within the platform, and I figured I would show you that today. So we're going to be looking at all four instruments, and we're going to be looking at getting long off the open, which is 9:30 a.m. Eastern time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time. For gap direction, I'm simply going to use gap up. I'm not sure exactly where we're going to be opening right now. We're getting close to yesterday's highs, but at the time of this recording, we're not quite above them yet. So I'll use gap up. If you want to come in here closer to the open, once you know where the open is going to be at, you can come in here and look at gap above the high, or open within prior day range, or maybe use a custom sizing type of opening location, or you could even use a pivot zone like we're going to be using from the price patterns for where we closed yesterday. So all kinds of different ways that you could look at it once we get closer to the open and know exactly where we're going to be at. But for now, we're using gap up. And then in the price pattern section, I'm going to say that yesterday closed between S2 and S3, and I just grabbed that from the active today section. It is right here. It comes from the location of last open and close category. And then I'm going to go into indicators, put us in a similar environment, so above a 10-day simple moving average, above a 200-day simple moving average, and then click view results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern time, exiting at the close, 4:15 p.m. Eastern time, when you gap up following a close that was between support 2 and support 3 from the pivot points. This is taking place above a 10 and above a 200-day simple moving average. And historically, we've got 21 samples in the S&P, 25 in the NASDAQ, 24 in the Dow, 18 in the Russell. So not quite as frequent there in the Russell. And all of these don't happen all that often. S2 and S3 is a pretty weak close. So getting a sizably weak close in a bullish market apparently does not happen all that often, followed by a gap up. But when it has, the S&P has closed above its opening price 62% of the time. The NASDAQ, 68% of the time, has closed above its opening print. The Dow, 58% of the time. And then the Russell, 44%. So Russell, a little bit weaker than the other three instruments. And if we look at average win, average loss, you'll notice that the average loss on 3 of the 4 of these is quite a bit larger than the average win. So the S&P average loss is about twice the size of the average win, so sizable difference there. That's not the case with the NASDAQ. The NASDAQ average win is a bit bigger than the average loss, but average loss quite a bit bigger than the average win in the Dow and also in the Russell. So 3 of the 4 of these have average losses that are quite a bit larger than the average wins. However, the win rates as a whole, if you look at all 4 of them, if you were to combine them, add them up, they all kind of lean to the long side. So the pattern has historically had a bit of a bullish tilt for the day. However, when it's wrong, it tends to be wrong by a decent amount. So we'll see how that plays out today. But I figured I would share that with you. Hopefully you found it helpful. Good luck today, and we'll see you next time.